So far, has the novel coronavirus outbreak changed your prediction for the global economy growth this year?
Yes, it has. We just lowered our global growth forecast by 0.3% or 30 basis points based on the outbreak of the coronavirus. In terms of the timing, it should take down most of the growth in the first quarter and then hopefully rebound in the second half of the year. It will affect supply chains and it will affect tourism mostly. Korea and Taiwan, which are part of the supply chains, those two economies took a pretty big hit of about 0.5% of GDP reduction in growth. Japan was a little bit less because it's more domestic. The other two relatively big ones were Australia, which gets hit on the commodity channel and the tourism and the education channel, and Thailand because of the tourism channel. But most of the neighboring countries had a hit to growth between 1/4 and 0.5% of GDP. Here in the US and probably in Europe, we're talking maybe 0.1 to 0.2% overgrowth.
Is it going to play out like short term or long term?
We defer to the medical professionals on that one. So the economic forecast always has what we call a confidence interval around it. That's obviously bigger now because we have this health scare that's much harder to measure. The kind of consensus view is that the spread or the contagion gets under control sometime in March, and then we get a recovery, and then that will last probably into 2021.
IMF expect a V-shaped economic recovery in China. So what is your take on this?
Well, first of all, the hit to China is bigger than almost anywhere else. It's 0.7% of Chinese growth over the year. Whether it bounces back or not depends on kind of which transmission channel we're talking about. We think for the supply chains, as long as the shock doesn't last too long and firms can just draw down their inventory and then bounce back, that's kind of the recipe for a V-shaped recovery. If you're talking about something like tourist flows, where you can't really run down the stock and then rebuild it, that's probably going to have a longer impact. Our chief Asia economist, Sean Roach in Singapore, did the forecast. He took 1 percentage point off of Q1 growth. But what happens again is we take a relatively big hit in Q1 and then we recover that in the second part of 2020 and then into 2021.
What is your take on the market reaction so far?
If you think of markets as big kind of information processing machines, that they're digesting all the economic data, they're digesting all the health data, they're trying to figure out when the worst is going to happen.
Federal Chairman Jerome Powell said that the central bank is watching risks of broader coronavirus disruptions right now. What does this mean?
Well, the Fed has a dual mandate. There's price stability and full employment. You know, if we get a downside shock to either employment or inflation, the Fed might see it necessary to act. But again, if they take an action, it's going to be 2 or 4 quarters until the full effect is felt. And if we get a V-shaped recovery, you don't want the stimulus coming through when the economy's already recovered. So they'll have to look at the size of the shock and whether the shock's going to reverse in the sort of normal time frame they'd look at for a policy move. Right now, I mean, our US economists are forecasting no move for the Fed as a result of the coronavirus.